FDI inflows into economies across Africa fell marginally last year to around $53 billion. Inflows to North Africa and Central Africa fell by 12% and 17% respectively to around $21 billion. Now, while bilateral lending by Chinese banks to African sovereigns has been in decline since 2016, has FDI from Chinese private enterprises followed a similar pattern? I explore that question and more with the Economist Anzetse Were when we review the outcomes from the 2024 FOCAC summit a while ago.
I mean, Europe and North America, private sector has a larger stock because of historical ties. But when you're looking at new significant source of private sector funding, Chinese and Chinese private sector actors have been very aggressive and have been very good in identifying points of engagement with Africa that make sense. And I don't really think necessarily things like double taxation agreements are going to be what makes or breaks it. I think what has been making or breaking it is what I call economic proximity. The Chinese private sector was not too far from where the African private sector is now. So they understand informality, they understand informal labor markets, they understand distributing and setting up legal agreements in those environments. These are things that are very scary for European and North American actors who really term them as risks that have to be managed, and if you don't fix this. So what we've seen is that because of the different capabilities the Chinese private sector have been bringing to the continent, frankly, their rate of FDI engagement has been very, very high. So I think what will be important going forward, really we'll be looking at what are the policy environment issues that you've raised, number one. I think number two is how do we deepen the financial vehicles the Chinese private sector brings to the continent? Right now, their vehicles are not as varied and as sophisticated as European and North American actors. So if you're trying to look at things like venture capital, private equity, if you're trying to look at things like green finance, climate finance, carbon finance, we've not really seen Chinese private sector showing up with those capabilities.
Indeed, it's actually kind of interesting. It's an interesting point you raise because, they were speaking about committing funds in order to refurbish the Tazara rail line. And if you essentially look at that, if you draw a map of Zambia and you essentially ask yourself, okay, where the rail lines that are essentially trying to exit, to essentially provide exit points for the cobalt and the copper coming out of the DRC and Zambia, it's interesting that you have this dueling of railways of sorts. This Tazara on one end heading out into the Indian Ocean, and then the Americans coming in with this consortium that's trying to build the Lobito corridor. So in some ways, if African sovereigns have access to these critical minerals, they're in an interesting position to be able to dictate terms.
Well, yes and no, because I mean, one of the concerns we've seen is obviously the soft power proxy war sort of trajectory around rare earth minerals because of how important those are to both the US and Europe, as well as China. And of course, we know all the rail lines and all the infrastructures is a legacy of colonialism, and we know why colonizers set those up is to get our minerals out. And so really what we have to see in the African states, and this is really quite serious and has to be focused on, is an actual capability building in negotiation around rare earth minerals and around value addition. Because if you sort of assume that, oh, people are going to play off each other and Africa's going to come out on top, that will not necessarily be the case. There has to be a very direct effort to build out those foreign policy capabilities to make sure African economic statecraft leverages all the rare earth minerals and all the other minerals that we have, including fossil fuels. African governments have not released fossil fuels entirely.
There was also a lot of talk about, expanding trade access for the sort of products, especially the agricultural products that are coming out of African economies, getting into the Chinese market. Big market on paper, 1.4 billion people. But do you think there was a missed opportunity here in the context of the debt crisis that a lot of African economies are facing now and the existing debt stock of debt to say, look, we're going to give, unilaterally on the Chinese side, we're going to provide maturity extensions and interest rate cuts. We're not saying we're going to write off the principal because historically that's not really happened. But we're going to provide maturity extensions and rate cuts as one way of essentially helping these economies to get over that hump.
Yeah, the debt issue, you have to bear in mind, that at the end of the day, any sort of debt rearrangement, debt restructuring has to come out of the sovereign state of Africa and the African countries. So while we understand the intellectual importance of what you're saying, one of the things I've seen, because I do work with ministries of finance and national treasuries, is the implications of any sort of debt rearranging, debt restructuring. We've seen this in Zambia. We've also seen this in Ghana, and the net effect that it has in terms of credit ratings, in terms of investor sentiment, in terms of again, interest rates. And so what you're seeing African governments try to balance is, yes, we understand that we've got to deal with our debt issue, but we have to do it in a way that won't lead to more difficulty in the short term because they are marrying debt cycles with election cycles, okay? And I think some of the examples we've seen, as I've mentioned, Ghana and Zambia, we've seen how long those have taken, how difficult that's been, and because it's private sector debt. Now, in the case of China, that's a bilateral debt, so in theory, that should be easier. But again, this will be informed by the appetite in national treasuries and ministries of finance in Africa. So that's really one elephant in the room that nobody's talking about. People seem to think that it's just an unwillingness of lenders, but you have to look at the countries in debt. They have their own issues that they're trying to deal with, and a discomfort sometimes that comes with that.